welcome back to the channel. If you've ever dreamt of retiring early, whether that's in your 40s, 50s, or even earlier, today's video is for you. We're going to walk through how you can make early retirement a reality through smart investing. If you're ready to get serious about your future, let's dive in. First things first, why would you want to retire early? For some, it's about escaping the 9-to-5 grind, spending more time with family, or pursuing passions outside of work. But whatever your reason is, early retirement requires more than just saving money. It requires making your money work for you. And that's where smart investing comes into play. Let's talk about the foundation of early retirement, financial independence. Financial independence means you have enough passive income from investments to cover your living expenses without having to rely on a paycheck. The goal is to accumulate assets that generate steady income over time. Smart investing is the key to building these assets. One of the most powerful tools in early retirement is compound interest. The earlier you start investing, the more you benefit from compounding. Compound interest essentially means your interest earns interest, which accelerates the growth of your investments. Even small, consistent contributions over time can lead to massive wealth. Let's take an example. If you invest $1,000 at an average rate of return of 7% per year, in just 10 years, that investment could grow to around $2,000. Over 30 years, it could grow to over $7,600. Imagine this multiplied by hundreds of thousands of dollars. This is how early retirees build wealth. Now let's talk about the kinds of investments you should focus on if you want to retire early. Here are the top strategies. Number 1, stocks and ETFs. Equity investments like stocks or exchange-traded funds or ETFs can be great for long-term growth. The stock market has historically provided an average rate of return of around 7 to 10% annually, which is ideal for compounding your wealth. Look for low-cost index funds or broad market ETFs to help diversify your portfolio and reduce risk. Number 2, real estate. Investing in real estate, whether it's rental properties, REITs, real estate investment trusts, or flipping houses, can provide a steady stream of passive income. The key is to choose properties that appreciate over time and generate cash flow from tenants. Number 3, dividend stocks. Dividend-paying stocks can be a great source of passive income. These stocks pay regular dividends, which you can reinvest or use to cover your living expenses. Over time, reinvesting those dividends can help you accumulate wealth faster. Number 4, peer-to-peer lending. This is a less conventional option, but platforms like Lending Club allow you to lend money to individuals or small businesses in exchange for interest payments. The return can be high, but remember that there's way more risk involved. And finally, bonds. Bonds are generally safer than stocks, but they tend to have lower returns. While not ideal for massive growth, they're useful for balancing your portfolio and providing stability, especially as you get closer to your retirement goal. If you've heard of early retirement, you've probably heard of the FIRE movement. FIRE stands for Financial Independence, Retire Early. It's a community of people committed to aggressively saving and investing in order to retire much earlier than the traditional age of 65. The key to FIRE is living below your means and saving or investing a significant portion of your income, often 50% or more. To achieve FIRE, most people target a savings rate of 50 to 70% of their income. That's a big commitment, but it's the fastest way to build up a sizable investment portfolio. Once you've saved enough, your investments will generate the income you need to live on, allowing you to work away from work. Once you've saved enough, your investments will generate the income you need to live on, allowing you to walk away from work. Now, the big question, how much do you really need to retire early? A popular rule of thumb is the 25 times rule. This rule says that you need 25 times your annual expenses saved in order to retire. So for example, if you need $40,000 a year to live comfortably, you would need $1 million in investments. The idea is that if you withdrew 4% of your portfolio each year, it'll last indefinitely. While the goal is to build wealth, you also need to manage risk. The earlier you retire, the more important it is to protect your investments. Here are a few ways to manage risk in your portfolio. Number one, diversify your investments. Don't put all your eggs in one basket. Spread your investments across different asset classes, stocks, bonds, real estate, and more. Number two, have an emergency fund. You don't want to touch your investments for emergencies, so build an emergency fund to cover 6 to 12 months of living expenses. This way, you won't have to sell your assets in a market downturn. And three, adjust as you go. As you near retirement, you should gradually adjust your portfolio to be more conservative, reducing your exposure to riskier assets. So let's wrap up with a few smart investing habits to keep you on track for early retirement. Number one, start now. Time is your biggest ally when it comes to investing. The earlier you start, the easier it will be to reach your goal. Number two, invest consistently. Even if you can only invest smaller amounts, do it consistently. Automated contributions to your retirement accounts or brokerage accounts can help you stay disciplined. Number three, live below your means. Living frugally isn't about depriving yourself, it's about making intentional choices that allow you to save and invest more. Number four, educate yourself. The more you know about investing, the better decisions you can make. Read books, take courses, or consult a financial advisor to improve your investing knowledge. Retiring early is not a pipe dream. It's a goal that's achievable with the right strategy and discipline. By making smart investments, living below your means, and following the principles of the FIRE movement, you can reach financial independence and retire on your terms. Thanks for watching, and if you found this video helpful, please give it a thumbs up and subscribe for more personal finance and investing tips. Got questions or want to share your early retirement goals? Drop them in the comments below. I'd love to hear from you. Until next time, take control of your future and happy investing.